another episode of The Finish Line. We have a special guest here today, Jasica Mahalingam. She's a licensed insurance advisor and she's a dear friend of mine as well. So welcome, Jessica. It's lovely to have you on this podcast today. Tell us, do a little introduction about yourself and what you did and what you do. Tell us.
Well, thanks for having me today. As you already mentioned, I am a licensed life insurance advisor. I've been doing this for about the past 8 years. I started this journey when I actually was wanting to mix a little bit of my health knowledge with wanting to become an entrepreneur. So that's where the mix kind of came in with my underlying health knowledge and then the need to help protect young families, all families actually. So I kind of merged the two, and that's when I learned of life insurance and got into the business about 8 years ago. And it has been very fulfilling along this journey, just to see the impact that it has on families. And more than that, a lot of the times that I get satisfaction is when I'm educating people. And then like a light bulb feeling comes in for them, like, oh, I didn't know that, or thanks for teaching me that, right? Even if it's not turned into, a policy right away, the goal is to raise a knowledge on this topic. So when they are ready, they know what their options are. Yeah.
It's funny because a lot of people will pay for everything else.
Yeah.
Before even paying for insurance.
Yes.
Like a lot of the clients that I ask, do you have life insurance?
Yeah.
I'm like, no.
Yeah.
And I think we're gonna get it. We're gonna dive into a lot of these questions. But one of the biggest things that I want to ask is, what is usually the thing that people misunderstand about life insurance?
That's a great question. There's tons of misconceptions out there. One being that it is not affordable, right? And the younger that you get it, the healthier that you are. All those things contribute to the price point.
Yeah.
So that's why I say education is important.
Yes.
Teaching people early on about the importance of it also benefits them financially because it's cheaper. Then the other misconception is that it's a very morbid topic and that it's always about death.
Yeah.
Nobody wants to talk about it. But in reality, it's beyond death, actually. There are policies out there that can even, benefit you while you are alive, right? Sometimes you could take your life insurance policy and use it as a collateral at the bank. So it goes further than just death.
No, that's amazing because you can leverage life insurance to even get a loan or a line of credit to use it for businesses or even different purposes that you need. When someone buys, like we're in real estate, right, or mortgages, when somebody buys a home, at what point should they get life insurance?
So that's exactly it, what you just said. So that is one of the biggest times when they should get it, because that's they're going to have a huge financial responsibility when they're buying a home. So that would be one of the most important times to consider getting life insurance, aside from all the other things, which is like marriage or possibly having dependents like children. But home ownership is one of the major times that they should be considering it.
So other than starting it early, I think when they're doing a large purchase, that is the greatest time to buy insurance. Now, how do you determine what amount you need of life insurance? Because, everyone's life, sometimes, clients might buy a condo and then they might upgrade to a, semi-detached or a family home later on into a bigger home. So is it recommended that you get a bigger policy from an earlier start, or can you keep on adding on?
So that's a great question, and there's so many parts to this question. So one, I think it's important to have an advisor that you will want to work with lifelong, because throughout that journey, like you said, there's going to be many life-changing events, whether it's starting somewhere from like a condo and maybe upgrading to something bigger, or having more children along the way, or buying multiple properties, whatever that might be. When you have someone that you can trust and work alongside with, they'll be reviewing your policies along the way.
Okay.
So it's their job to make sure that there are no gaps in your policy, right? As long as you're updating them as well about your life changes. So with that being said, yes, someone who buys, let's say, a condo and their mortgage is $500,000, but now a few years down the road, they buy a house and let's say their new mortgage is $800,000. There's a gap of $300 there. So that would be a good time to get another policy to fill that gap, because this is all about protection, right? At the end of the day. And now you ask the question of, should they just get more earlier, right? Because of course, if you get it early, it's cheaper.
Yeah.
And that comes down to things like affordability.
Correct.
Right? If they can afford to do so, then yes. But most of the time, the way we conduct this and try to assess, okay, how much coverage one needs is like, we'll see, okay, what are your financial responsibilities? What are the debts that you have, whether it be personal debts, mortgage debts, and how many children do you have? What do you foresee as your financial obligations? Or if you are, one of the main financial contributors in your home, and if you were not around, how much would the other person need to sustain that same lifestyle or similar lifestyle?
What is that number?
Right? So that number varies from person to person, right?
There's no set numbers.
There is no set number. It's different for every individual. We have people who might need $500,000. We might have people who need $1 million, and we might have people who need couple of million.
Yeah.
And again, that could also now go into things like, what if you own a business? Right? So there's so many streams and so many factors we have to. So it's a very important meeting when we meet clients to go through all those questions. And it's like trusting your doctor, your accountant, your lawyer, right? We're up there as well with like the trust, the level of trust you should have with your advisor. There should be no secrets. When I say secrets, like it's because at the end of the day, whatever you disclose is what the agent will be able to protect you with, right? And essentially, if you want your family to sustain the same lifestyle, it's good to be honest about all your debts and all your financial obligations.
Makes sense.
So it's a very broad question, but it is very dependent individual to individual. That's why we have to do a proper assessment on what are your needs, what are your liabilities, etc.
Okay.
Yeah.
Now, one of the things that I even had questions in the past is like, there seems to be two main types of insurance, right? There's a term insurance and there's that universal. What is the main difference?
It boils down to, someone who wants to maybe have like a shorter, like a permanent versus a non-permanent policy. And again, it comes down to kind of affordability as well. It's not just universal, there's multiple products out there.
I only need those
the
two.
main differences between something that's like more permanent and something that's like term is that term will last you the lifetime that you purchase it for. So if you're getting a 20-year term policy, or let's say your mortgage is for 25 years and you buy a 25-year term policy, it's going to last you that length of time. But there are things you can do with that term policy in between. But that's the main difference, meaning like the permanent versus the non-permanent, right? And then there's a bunch of other permanent products as well.
I think there's been just like everything else evolves, just like that in the insurance world as well. They have so many different products. They even have products, I guess, that has savings and stuff component built into it, right? So that
cash buildup,
which is amazing. Do you see some clients are too late on getting these insurance coverage? Like, I find that sometimes people wait too long and then they don't qualify. What do those clients go through? Like, what can they do?
So it's never too late to attempt to get life insurance, but some of the unfortunate circumstances, I should say, are when clients can't get approved because of their health. So we often think that we're going to be young and healthy forever. I hate to use the term invincible, but that's sort of, or we just kind of think life gets busy too, let's be honest.
100%.
So even though our intention might be to do it, it just gets put on the back burner, right? And there's nothing wrong with that. But sometimes for some people, it might be a bit more difficult. The underwriting process might be a little bit more difficult in trying to get it approved, or they might get rated, right? For someone who might pay, they might get rated like 10, 20, 25% or something.
So when you say rated, they pay a slightly higher premium.
They pay a higher premium than someone who doesn't have the same.
So even if somebody's smoking, they can still get insurance, but they'll be rated, meaning that they'll pay a premium.
Yes.
Now, when it's smoking, is use of marijuana considered smoking as well?
Yes.
And vaping considered smoking?
Yes.
Oh, wow.
Yeah.
Even vaping.
Yeah.
So you guys don't wait. Another thing, kids. Do you recommend getting insurance on your kids at a younger age?
I would say make sure that the people who are the financial contributors are first covered, right? So, whether it's, so let's say in your situation, it's, mom and dad, like the husband and wife or partners are covered first. Once you have all the basics covered, and your next step could be looking into your children. And if you have the financial means to do it, I would say that's a great way to get started, because, I have it for my children. And it's sort of like my gift that I'm doing for them, right? That when they're older, it's paid off, right? So I think it's a great next, something that our generation could definitely do. If you already have your own family protected, these would be the next steps, which is teaching your children about the importance of these things, right?
Well, my parents, they didn't get insurance on me, right? But I'm getting insurance, right, for my kids. And when you look at that, it's like you're not really getting the insurance for the kids. You're kind of setting up the kids, right?
Yeah.
Because if something were to happen to them, it's their kids that will benefit from that fund. So it's almost like a sort of like a wealth building, right? Like this is how you build wealth that gets passed on to generation.
But hey, keep in mind, like if there's cash buildup in those policies, and if
You can always
need it,
utilize.
they can use it too, right? But yes, I think it's more for me about the educational aspect and setting the future up, right? Whether it's the kids or the grandkids or the, like you said, like a legacy or future generations. It's about teaching them this knowledge that, we may have not had growing up.
Yeah, for sure. And like we talked about like underwriting, how difficult is it to get insurance underwritten? Like if somebody has like a medical condition, like what are some of the, like if somebody has diabetes or somebody has heart conditions, those are harder, or like how do they rate these
Definitely.
things?
Like, I mean, of course, they'll ask you the necessary medical questions. Sometimes, they may even require more information from your family doctor or your specialists. And so the underwriting could take a little bit longer than someone who got approved quickly. No, but not to say that you will get declined. Like I said earlier, sometimes you might get rated. But in certain situations, like, just because, for example, if you have diabetes, it doesn't mean that it's a bad thing. But someone who's on like metformin versus taking insulin injections, it's two different stories right there, right? So the way they will be underwritten or, even approved will be different. It might be difficult for someone with insulin injections to get approved compared to someone who's not on that. But again, it all depends on their health history, what else they've been through, and how steady their health has been. They will consider all those factors, and if they have further questions, usually they do contact the physicians. And there is something called a medical information board. So the MIB,
everyone
everything,
connects.
everything is kind of connected.
Okay. Now, I know a lot of people, when I talk to people sometimes about insurance, they're like, oh, I have it at work. What is one thing they would tell those people that say, hey, I have insurance at work?
I mean, for some people that might be enough, right? If that's all, if they're not very knowledgeable about it, or some people, they think that their kids will be fine regardless. If that's their mindset, or their partner will be fine if they weren't in the picture, maybe the amount that they're getting from work might be enough for them. But the reality is that it's not enough for any family, right? Because when one person is not there, or when one income is missing, that's a huge financial strain on the other individual. You might have to downgrade or sell your home. And so in the midst of going through grief, you also have, all these other things to think about, right? And that's why the life insurance is such a great asset to have, because when you are going through that grief, this is one less headache for you, right? But like, to answer your question, the work insurance, I personally don't think it's enough. Because like I said, like it's not going to replace that one person's income, right? For how much?
And also, one of the thing is like work. Everyone thinks work is there forever. They work for these offices and they work for these government sectors. They think they're going to retire there. But you can have layoffs, you can get fired, so many things. So then what? You start work at 25 and then now you're 40 or 45. You got laid off, no longer work there. Now you got to requalify for insurance because you no longer have coverage.
Yeah, and so now you are getting rated as a, let's say, for example, 45-year-old, right? And now your health conditions also might have changed. So you're paying more than what you could have paid 10 years ago. You may not even get the coverage sometimes, right? So there's all those factors. And like you said, like a lot of people, are starting their own businesses, becoming more entrepreneurial. So that's the kind of world we are starting to live in now, because not to say that like everybody's moving in that direction, but when you do, and if you do leave your corporate job, that will be a big strain on you trying to get it at later in life, right? Or what, like you said, what if you are laid off in your 60s or sorry, 50s even, right?
What are you going to do? You're going to restart all
at
over.
that point. And it's sometimes sad because I've actually been in a couple of times in situations where like 50, 60-year-olds are asking me because they've had term policies that have expired, or they no longer work they used to work for, and they're asking me to get them policies, but they have all these
Other
medical conditions at age 60, and we can try, but the likelihood of them getting a good rate is not there, right?
So even if somebody has a coverage right now, it's okay to revisit it and see if there's ways, even if they slightly pay a little bit of a higher premium, it's better to get it topped up or reviewed again.
Yeah. So you could have it from your workplace, but I would still advise against, not against, I would still advise to get insurance privately as well. And that's why the sit down is important, to see how much your family actually would need. I've had individuals in their late 50s, early 60s come up to me and say, I had term policies that I got like 20 years ago. It's going to expire next year. What can I do? Right? Or, and more than that, like, I have individuals who will be like, I stopped working there, right? Can you get me a policy now? Because now they're starting to think, okay, my kids are growing.
Yeah.
I see grandkids now. What can I leave behind for them?
Yes.
Right? But unfortunately, sometimes like that thought process is too late at that age. And I'll try my best in every way, sit down with my brokerage and, go through what are the options for them. But then even if we give them options, it might not be affordable for them, right? So even though their intention and heart wants to do it, they might not be able to afford it.
Yeah. If somebody has an existing condition, for example, right? I know a lot of people will be like, okay, you know what, I have this, I won't qualify. They already like self-determined in their head that they won't qualify, right? Is there like a period where if they're healthy, they can reapply again? Like let's say they get rated, like let's say a smoker, for example, they're rated. They can get a policy now, get a higher premium, and then they can quit smoking, and then they can requalify. Is there a window like that?
Yeah, there is. Yeah. Like, but of course the insurance company will do their due diligence to make sure that you're clean and you've been not smoking for X amount of time. So, it's like, it's work on both sides, right? So the individual has to also be clean and quit smoking for a period of time. And then the insurance company will also do their due diligence to see, okay, has this person really quit smoking? Okay, fine. Now we can lower the premiums.
Got it.
Yeah.
Got it. Are you seeing more and more people thinking, like, I know in our age group now, more and more people have kids and they have, families. I think more and more people are thinking of getting insurance. What are you seeing? Like,
definitely. Yeah. No, I think the thoughts and the feelings really kick in for a lot of people once they have dependents, like kids. Because often when it's just two people, they'll think, okay, the other person will be fine. So it's usually when the kids kick in, right? The emotional feelings. That's when they start thinking, okay, now I have kids. How can I protect them? Right. And that's a normal feeling, right?
Yeah.
There's nothing wrong with that because everybody goes through it. We think of, okay, how can I protect my family? Right. And then a lot of people also, like I said, it's one of the misconceptions that people think they only need it after they start a family, right? But that's not true,
they're also
right?
older. Yeah.
You can get it when you're younger as well.
Yeah. And, to kind of connect with that and piggyback off that, like, at the beginning when I was trying to get insurance, I was always like, I don't need insurance. Insurance is like when I kick the bucket, it doesn't matter at that point, right? Now that I have kids and stuff, I'm trying to qualify for insurance. It's much harder, right? And that's why it's always like, even when they say, oh, I have it with work, they don't realize that the work has their own, they only pay 5 times or 4 times the salary sometimes, right? That might not even be enough for them to cover the expenses and the mortgages and all that stuff. So it is very important to always have outside insurance policy as well,
and
right?
again, you don't necessarily have to jump the gun and get the policy today, but have a sit down with someone who has knowledge in this field, right? Someone that you trust, and sit down and go through all the numbers with them, right? Like your liabilities and your assets and what your needs will be, because there's calculations for that, right?
Yes.
We have formulas for that. So
And is that based on every age? Like, I
yeah,
think
there's
once
so
you
there's
hit like a
age
certain
and like
age,
number of dependents, and then the number of years someone might be depending on you. Those also factor in. So you could have a sit down, get assessed, and then sit on it.
yeah,
Right? Because this is not something that
you gotta
I
jump the
don't
gun
like.
there.
I'm not a pushy person, for example, for myself, because I don't believe in like forcing someone to get something if they're not ready.
Yeah.
And then what's the point? Because
They
2
waste it.
months from now, they might not be able to, they might not want to have it. They might
Yeah.
want to cancel it. It's always best to do it when you're fully on board and ready, when you understand the importance of it, why you're doing it, and then the financial responsibility of it too, right? Because this is a monthly premium, right?
Yeah.
It's something you're going to pay every month. I mean, you can do it in annual payments too, if you don't like having the monthly bill.
Yeah.
But
Is it
it's
cheaper?
it is a slightly
Oh,
cheaper, a
wow.
little bit cheaper, yeah. So all those factor in. So when you're adding like another bill into your monthly, right? You have to be ready for that
Yeah.
too,
Yeah.
right?
You know what? I've seen instance where clients come in, they have a bunch of debts. We're able to even refinance and consolidate their debts and even allow them enough cash flow that they can actually afford that insurance.
Right.
You know what I mean? Because
Good.
they were spending that money somewhere anyways.
Yeah, like
Now they,
subscriptions, eating
yeah,
out.
yeah.
Like how much do we spend when we go out? We're friends. When
Yeah,
we
yeah,
all
yeah.
when we
When
all
we
get
go-
together and we go out, how much are our bills?
Quite a bit.
Right? So,
You
if,
can afford that little insurance payment that you
Yes,
need to.
yeah.
And I always believe they should make it so that you have some kind of insurance coverage at
Yes.
least, right? Because life happens.
Yes.
And you always want to make sure that you're protected or your family's protected,
Mm-hmm.
right? And I think when I used to work at TD, there used to be a saying that you need about 9 times your salary usually you want to leave behind. I don't know if that could be right.
I mean, again, like I said, it's
Everyone's
family to
need is different.
family.
Yeah.
Based on everyone's lifestyle. What if you have businesses now?
Yeah.
Right? Those are also key things to think about.
And it's not just regular insurance that you do. You do business insurance as well. You do critical.
I do critical, I do the life, the disability, the wealth planning,
Okay.
all of
So
that.
you do
yeah.
all sorts of insurance. That's amazing.
Well, they all kind of, at the end of the day, kind of are protecting the same
Yeah,
thing.
yeah.
But, it might be different for someone who wants to protect their business versus someone who wants to protect like just their home needs.
Yeah.
And then there's like, of course, like for business owners, you might want to protect your partners, right? Because if there's 2 key players in a business,
Yeah.
you want to make sure if one person, is not in the picture, the business will still continue and
It can still sustain and run.
sustain itself, right? And then we talked about critical illness, especially so important for people who are self-employed because, at any point you can get any one of the major illnesses that the insurance companies talk about. And if that happens, you might not be working for 6 months to a year. So, how are your bills getting paid, right? What if you were the only one working and your wife or partner, someone was depending on you? So can you, outlive that major illness and still have money coming in?
Yeah.
And if you can't, that's where a critical illness check comes in. So there's a personal story for one of our family members is they used to own a couple of businesses and right before this was like many years ago, we're talking like 25 years ago, right before he had his first heart attack, things were rough in their business. So they decided to like cancel some of their monthly bills.
Yeah.
And one of the things that they canceled was their their life insurance and critical illness. A month later, the husband got his first heart attack at age 42.
Wow.
That critical illness check would have gone such a long way for that family.
To subsidize
right?
some of the expenses.
Yeah. But then they realized the importance of insurance thereafter. But now it's much harder to qualify, right? Because you just had a heart attack, right?
Yeah.
So many things, right?
Yeah, there's a lot of stories like that people
It's
realize
unfortunate.
later.
Yeah. That's something that happened into like one of our family members. So that's something that I'll always remember.
Yeah.
And from there on, everybody's been protected.
Yeah, like we see sometimes because when people want to, like when they have to skip some kind of payments, the first thing they skip is home insurance and life insurance for some reason. They think it doesn't matter.
Yeah.
But those are not things that they should be skipping.
Yeah. It's not just about, you guys as mortgage agents do an amazing job at like getting mortgages approved, right? You do your part. But then it's not, just the approval, right?
Yeah.
That clients have to think about. Clients should be thinking, okay, I bought this home now. It's not just about
Protect it.
getting the key, right? How can I protect it now, right? How can I make sure for the next 25 years, the people living under this roof are protected, right? So, like you said, there's home insurance for the actual physical structure of the house and the contents. But what about, the financial monthlies, right? Because like you said, what's the first thing that we tend to cancel, right? When people struggle, right?
Yeah, those are the first
people
things.
are not changing their lifestyles, right?
Yeah.
People aren't going to say, oh, I'm going to go out less, or, I'm going to stop making my car payments, because they still want to drive what they want to drive. They still want to go out, right, to all the social stuff, but they think about these things when in fact they're actually the most important things, right?
That you shouldn't be skipping.
Yeah.
If you ever skip a payment, or like if you miss a payment, do they cancel the insurance?
No, I mean, the insurance is very forgiving. They give you multiple attempts to
regain,
to make up for that payment. But then after a certain number of days, they do send like a termination letter and say, hey, like, your policy has been terminated. But if it was just due to payment and now you're like, oh my God, I can catch up on my payments, you can reinstate your payment under the conditions that, like, your health hasn't changed now. But now let's say
so you have to go through the whole underwriting again.
Well, they'll just ask you some questions. And in those questions, if you tick off saying my health hasn't changed in the last 6 months, like during the time that you were missing your payments, then it's all okay. Then you make the payment and your policy is reinstated. But now what happens? You went to see your family doctor about something you were complaining about. And then you have to be honest and say, yes.
100%. These are things that you want to be honest.
Yeah, of course.
What's the point of paying for something and not getting it?
Exactly, right? Because, we've heard horror stories in the past, right? But so that's why honesty is the best policy in insurance, right? Like I said, don't lie to your accountant, your lawyer, your doctor, and insurance advisors as well.
And your mortgage broker.
Of course, yes. No, it's true though. We all kind of like work with each other in those departments, right?
On that note, also, I wanted to ask you this question about underwriting.
Okay.
Like, how difficult is it to get underwritten for somebody that has a condition?
It really depends on the condition.
Yeah. Like all those questions, like sometimes when I go through these insurance questions, I see all these questions. I'm like, I don't know if I really have this or not anymore. You know what I mean? Like those questions are so like.
So if you're unsure, it is. And if you are unsure, I would definitely say to do that healthcare questionnaire make a family doctor appointment.
Yeah.
Take it with you.
Oh, you can do it with the doctor.
Yeah, I would say to do it with your doctor, right? Because they would know the terminologies better than anybody.
Yeah.
Because then they could say, you know what, yes, that is what it's called, or say no, or say yes.
Yeah.
So also you have a peace of mind too,
that it's
right?
The right answer.
The right answer, right? Because again, like you don't want any hiccups later.
But they do go and underwrite the policy. So meaning that they go to the bureau to check if you ever.
So that it depends. Like if you're doing a medical policy, yes, they go through the whole process.
Which is good though, right?
Which
that
is
means
great.
You're
everything is getting checked. They send the
checked.
nurse to your home. The nurse does all her checks, and you give your blood sample, the urine sample, everything, all of that. And then if there's any further questions, let's say while sitting with your advisor, you said yes to a few of the questions, right? It will prompt us to ask you more questions. From there, if the underwriting department feels like they need more information based on what we answered, then they will contact your family doctor or your specialist, right? And we'll be providing those information anyways to them. But, if you answer no to everything and you're not, it's not necessary, most of the time underwriting won't have any further questions then at that point. But if they do find something that you said no to, but then they find out it is yes, they may come back and say, hey, you missed this point, or can you double check with your client if this happened, right? At which point that means they've found something that you didn't disclose, that we missed, or you forgot even, because let's be honest, like there's so much that we've gone through in our lives. And it might have been something from 10 years ago, right? It might have been something that you said to your workplace for fun, but then you forgot about it, right? But it's in the record. So it's good to just get all that cleared and out of the way before the
So
approval.
all those doctors note that they got, it'll be on record.
Yes. Yeah.
I think I can dive into so much more questions,
Yes.
but we don't have enough time. But
No,
you know
for
what?
sure.
Just thank you so much for
Of
joining
course.
us today.
Thank you for having me.
We're gonna be dropping just contact in the info at the bottom as well. If you guys have any questions on insurance, any insurance related to critical life, business, or even
Disability.
disability.
Yeah.
She doesn't do home insurance, but everything like that, reach out to her. We'll drop her comment, her info in the comment, and yeah, thank you for joining
No,
us.
thank you
Jess,
for
as
having me.
always.